JP Morgan has partnered with Visa. China's digital currency transaction value reached 100 billion yuan. Today I will also show you a chart that shows very tough times are coming. Subscribe, like, let's begin. JP Morgan has partnered with Visa to improve global payments using their private blockchain networks. These networks are Link and B2B Connect. The Link was launched by JP Morgan in 2017. JP Morgan also announced that it will recruit more banks, so together they will create an alternative payment system to SWIFT. The service is to be expected to be fully operational in 10 countries by the end of 2022 and in 30 countries next year. Next, China's digital currency reached the transaction value of 100 billion yuan. 360 million CBDC transactions were made in 15 provinces of country. You can buy goods with digital yuan in 5.6 million stores. Why are digital yuan payments becoming very popular in China? Currently, 94% of the electronic payment market is owned by WeChat and Alipay. Both companies charge a small commission on each transaction, and there is no commission while using the digital yuan. Due to lower costs, entrepreneurs are quickly switching payment methods to digital yuan. Interestingly, you do not need an internet connection to pay with electronic yuan, and there are a lot of people living in villages in China. 29.1% of people in China were not connected to the internet at the beginning of 2022. Next! What I'm about to show you now is kinda worrying. The chart you're seeing is the government bond yield curve. This is a healthy chart. At the bottom we have the maturity time of the bond and the interest rate on the left. We can buy bonds with maturity of 6 months, a year, 5 years or even 30 years. And it's obvious that when we buy bonds with a long-term maturity date, we should get a higher interest rate, right? But look what is happening with the US bond yield curve right now. The blue line at the bottom shows the interest rate 1 year ago. It was a healthy chart, but now short-term bonds pay more than a long-term. This chart is actually inverted. But how? This is happening when the Fed assumes that something very bad is going to happen in the market. Historically, an inverted chart was a sign of a coming crisis. Both in 2001 and 2007, it was the beginning of a serious downturn in the economy. First of all, in the last few years, the Fed has raised interest rates on short-term bonds, and this is a sign of the uncertainty of the US Monetary Policy Council. On the other hand, the decline in US long-term bond rates is also the result of negative interest rates in both Europe and Japan. Investors from all over the world were buying long-term US bonds, which lowered their interest rates. Are we heading towards a serious crisis? And unfortunately, I have to admit that is very probable. Subscribe, like, and see you next time. Bye.